Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 28th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Real quickly here, the market will be closed in the U.S. in observance of Good Friday. Tomorrow, March 29th, we'll be back at it April 1st on Monday with another pre-market video, and also be on the lookout for our Q2 monthly outlook here coming up next week. I'll put out a link and more information regarding that event, which is free and open to everyone. All right, let's take a look here at the ES in the daily time frame. You'll see right now super narrow range here as we head into the RTH open. This range just opened up just a little bit here on the release of GDP data, in addition to initial jobless claims. GDP coming in at 3.4% versus a 3.2% estimate. Initial jobless claims coming in at 210K versus a 212 forecast. So right now you saw a little bit of a blip to the upside, and then it fell back into the range. Super narrow overall. 11.5 points, that's 24% of average range. Just not a lot of volatility here. The expectation here for today could be sideways with an upward bias as we head into the holiday extended weekend and begin Q2 on Monday. Overall, this market is also trading within a very, very narrow range. If you look at the last 5 sessions here, that's about as narrow as it gets. 6 sessions, if you add today, we can quantify a 6-day narrow range here. And this could provide us a little bit of initial juice to begin next quarter. So right here, 46% of ADR, just 59.75 points of range over the course of these 6 sessions here. Again, this day is still developing here, so that could change a little bit by the end of the session. But for the most part, still very compressed. And the expectation would be for a breakout move and some sort of expansion here that takes you at least north of 150 points of range. It could be even higher than that. If you look back at the last few times we've had compression, right here, just bringing this back, there's multiple times here. You have at the very end of the year here where it compressed, and then we saw some early volatility to begin the year. You had this moment here where you had some compression. It was down first, then up. You had that moment right there, which was this compression here. This initially pushed to the upside, came back, and then check marked higher. And now we have this one right here that's showing this compression at the moment. So what we could be looking at is something similar to what we saw to end January and begin February, where price may have dropped early, and then we see a continuation to the upside. Again, we're working our way higher toward 5,400 up ahead. 5,400 continues to be the level to go get here, especially after crossing 5,000 earlier this year. So looking to this for this market to go reach 5,400. If we get a pullback, maybe a retest here into the FOMC key level, it could be about a 165 point rally here into 5,400 to begin Q2. All right, taking a look here at the NQ. The NQ right now showing a similar compression here. Right now the NQ is trading just 29% of average, 68.5 points of range right now for the day currently. We have a narrow 6-day range right here that has developed into 57% of average, 330 points of range. That's really, really compressed. And again, when you look back at our indicator here and you look back at the times where we've seen compression, we've seen some pretty good expansion opportunities out of there. This one right here was a little less expansive here, but we did see some really good movement to the upside overall. A couple of times here where it got compressed, but really not super compressed enough, but it did get a little bit of action there. This one is the most compressed of each of those moments in time, and we could be looking at a move that takes us at least up toward 700 points of range here. 700 points could be fairly easy. We've gotten it on the last few rotations to begin the year. 700 points could be a pretty good target here. Again, to begin Q2, do we get a push down first? A push down to say 18.3. 18.3 plus 700 puts you right into 19,000. 19,000 as the next upside target could be in play. And if you look at our key range right here, the key range that was recently developed, we're working our way higher toward the 100% target, which is 19,021.5. So 19,000 could be the early target to begin Q2. Any pullback here into, say, the FOMC key level could be defended as this thing continues to stretch to the upside. Looking at crude oil. Crude oil right now up 1.7% here today. This one has also remained within a range here over the last 8 sessions or so. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions of compression. This day right here is actually showing quite a bit of strength here, quite a bit of elongation. Had an early pullback at around the 3, 4 o'clock hour this morning, and it's been higher ever since. Very, very bullish here. If you look at this, again, making it a 9-day range here, we could even go 10, including today's session. It's really, really compressed. 54% of average, just 2.82 points of range. And if we do get an expansion day today, we could be looking at a move that takes us quite a bit higher. Again, 6 points would be the 125% extension. That would be fairly easy given recent history of this market here. Pretty easily able to go about 6 points on a 9-day range basis. If we are going to see a breakout day today, you'd likely close beyond the 83 level. Right now, price is approaching the previous week's high. 83.12 is that level. And if we can close through that zone, maybe perhaps we're pushing to the upside. And from the current day's breakout low, 81.50, we'd be looking at about a +6. That's an 87.50 upside target over the next couple of weeks. So again, that would give us plenty of juice to go to the upside. Now this market has been able to go up in short spurts, but really hasn't been able to extend beyond that. So even if we did go higher, it could just sit flat and stay sideways for a while. That's kind of been how this market has played out. And that's a big if still. Can this market push through 83s with confidence and close beyond them here on a day where perhaps quite a bit of volatility will drop by the end of the session? So this build out could be heading into next week's range or next week's market. If we go with a 10-day narrow range here, we're expanding this thing up toward about $7 on a breakout range basis. So even if we were to pull back early next week into the pivot range, do we get a check mark continuation higher? That could be in play for a move toward 85, maybe higher into 86, 87. So this market again could be working its way higher. It has seasonality, bullish seasonality behind it as well, that takes it higher toward the June, July time frame. So again, could be quite a bit of strength moving forward. If we take a look here at gold futures, this one's up another 0.2% and has hit a new all-time high here. A new all-time closing high yesterday. Now a new all-time high, 2237.6. We mentioned before here that this market's able to shake off some weakness here, able to shake off some rejections. Yesterday it closed through the midpoint of the session, which suggested that we were going to go take out the high and put in a new high. So this market's looking quite bullish. If you're looking at this from a weekly chart perspective as well, last week's major weekly rejection has been just mowed through, especially through that midpoint, now through a new high. That would suggest more strength into the next month. So very bullish. If you look at the higher value relationship here, it's very well intact. A wide pivot range for the month, as this has been a very wide month of trading range action. So maybe there's some sideways with an upward bias here, but overall this market continues to show quite a bit of strength through 2100 and now is finding acceptance through 2200, which could open up the next upside target here, which we have at 2316 by way of a large key range. So 2316 could be the next major target ahead based off of the strength that we're seeing in gold. Lastly, taking a look here at the YM. The YM right now has continued to show quite a bit of strength overall. It has shown a little bit more volatility lately compared to the ES and the NQ. You can see some of the sizes here of the recent bars have been quite large. Yesterday, we were looking for, if we were going to see a breakout day or an expansion day of the equity futures, it was likely going to be the YM. We talked about how narrow the 2-day range was, and if this market can step through the 39.9 level, it can open up some upside. It did that early, then went sideways for quite a while. The last hour of the day was huge for this one. Major strength. And again, the idea to begin the week was any early pullback could be bought for a continuation higher into the holiday extended weekend here in the United States. And we saw that in spades here over the last couple of days. So big time rally here. Now, can this market extend beyond this? If so, we have an upside target here that could be in play at 40,900. 40,918 is that target. That's the 100% target of the key range below. It was able to push through the top of the key range, hit the 50% extension, come back, sit on top of that key range high, and is now working toward 40,900 up ahead. Again, even if we were to pull back early in April, the first day or 2 or 3, that could provide a buy the dip opportunity for a continuation toward 41K up ahead. All right, that is it for now. We'll see how this develops here heading into the holiday extended weekend. Have a fantastic Easter weekend, and I'll see you on Monday. Take care.